Hey everyone, and thanks for jumping back into the cryptoverse. This is your weekend premium video. Hopefully you enjoy the content. I first want to start off by talking about some additions to the Workbench. This is something that we've continued to develop because I think it gives people the ability to really look into a lot of different assets that perhaps I don't take the time to do so, or you could even create your own indicators. Now I know there's a lot of people that don't really want to spend time creating their own indicators, and I can fully respect that. Of course, not everyone has the time. But again, using this workbench does give you the ability to analyze things in ways that you maybe haven't been able to before, because you can look at things, you can add metrics on here, such as, YouTube subscribers. And you can look at that and figure out, how does it compare to other metrics, right? And you can take this indicator and play around with it and sort of look at it in new and exciting ways. But we've also added a few other things, like we have the total market cap, but now you can also look at the total market cap excluding Bitcoin. So let's pull that up. So the total market cap excluding Bitcoin. Let me go back on over to the market cap here. That's what it looks like, right? You can look at total market cap uh, excluding stablecoins and add that to the chart and see what it looks like. Right. So the point of this is that it gives us a way to look at the asset class in ways that we simply, perhaps we're not considering as frequently in the past. But one of the most interesting ways I think to use some of these new metrics is to actually look at the the Bitcoin dominance with and without stablecoins, and to overlay them on the same chart. Because when you do this, it really does show you the divergence of these two metrics, right? So, for a long time, they were more or less the same, but really ever since 2021, these metrics have really started to diverge. And part of the reason is because a lot of people have been going to the relative safety of Bitcoin, but also because people have been going to the relative safety of stable coins. And again, I've been out of stable coins since Q1. I converted all of my stable coins just just to cash, and I've just been earning yield through more boring measures, right? Like CDs and that sort of stuff. But this really does show you how the dominance of Bitcoin, of course, is a lot higher when you exclude stable coins. And I mean, I think if you take a look at a lot of the different charts, a lot of the altcoin charts, I mean, again, a lot of them continue to really struggle on their Bitcoin pairs over the macro scale. I mean, we talked about ADA Bitcoin for a long time, and how I do think that ADA Bitcoin will eventually break down and continue on with its bear market, not only against the US dollar, but also against Bitcoin. The same idea, with dot Bitcoin. Again, you can kind of see the same thing. It's putting in higher lows, but as history shows us in these bear markets, is that these higher lows just tend to eventually break down. And once we do break down, we can start to move relatively quickly. So again, a lot of these altcoins still remain under a lot of pressure on their Bitcoin pairs. Not all of them. I mean, again, some of there's always a few that outperform, and I was very upfront about that at the beginning of the bear market. That there's always a few that will outperform. It's hard knowing exactly which ones those are going to be, and I don't really like to play that game in the bear market. I just prefer to mostly get out of the altcoin market and to basically just be in Bitcoin and to focus on stacking cash in bear markets in preparation for the accumulation phase, right? In preparation for the accumulation phase on the altcoin market. And again, it just simply takes a long time for us to sort of reach that point. Look, I mean, a lot of these altcoins continue to sort of push down. And if we were to go compare the bear markets for some of these different assets, you can kind of see what I'm talking about. So, I mean, this is Bitcoin, right? And it's still well within the context of prior bear markets. But look, I mean, look at things like ADA, right? I mean, this bear market could continue to drag on for a while. The last bear market was fairly short, or fairly quick in terms of just finding the bottom. This one continues to sort of just slowly bleed, and that's why I want to remind people that price-based capitulation is only part of the equation. Time-based capitulation is honestly the more grueling part. If the price of every asset in crypto just dropped 99% in one day, and then we just went up from there, it'd actually be quite easy. I mean, you'd obviously want to try to get out of the market before that day. But even if you weren't out of the market and you had cash sitting on the sidelines, you could then put it into the market if you felt like the bottom was in. The hard part are these long bear markets where we just sort of slowly bleed, and there's not really a clear capitulation that everyone's waiting for. Everyone's waiting for this, clear this clear capitulation where it seems like it's a major bottom, but that's just not been the case so far this bear market, right? It's just been a slow, systematic bleed. Again, look at Ethereum. It hasn't seen that same type of major drop like it saw at the end of the last cycle. It doesn't mean it won't, right? And if you take this out to the peak and sort of look at it like this and say, well, the bear market could continue for a while, these are the types of charts that continue to make me cautious. If you look at the indicator dashboard and go look at the social risk, it still remains relatively high at 0.391. I know a lot of people, still don't really value this metric. I will remind you that it has been so far, it is kept me bearish along with a lot of the other Bitcoin bottoming indicators, and so far that has proven to be the correct thought, right? I mean, these are the indicators that kept me bearish throughout the summer, and now, I mean, at your leisure, you could buy Bitcoin right now at a lower price than you could have all summer. So for everyone that was freaking out because they didn't buy this 17.5K bottom, and a lot of people thought that was the bottom and they sort of missed it, and Bitcoin was going to take off without them. Look, there are plenty of indicators, right? Plenty of indicators that would have kept you bearish, and one of them is the social risk. And I think it's coming down quickly. I think eventually we will put in a new low, either late this year or early next year. And we're going to get into that, that apathy phase where a lot of people just no longer care. Look at the last bear market, right? Social sentiment bottomed. It bottomed on apathy, not when everyone still cared enough to tune in and watch the train wreck, right? Remember that. It bottomed on apathy, not when everyone cared and not when everyone kept asking me if the bottom was in or not. Furthermore, if you go look at the bottoming indicators, I mean, still we're well within the context of prior Bitcoin bear markets, right? I mean, the 2014 bear market still had legs for another month or two from this point. If you go look at the running 1 year ROI, it's currently at 0.282. I know you could argue that it's bottomed, especially considering we're over a year past the peak. But if you were to put in like a future projection of say like $10,000 or something, even by let's say December 28th, I mean you could still go down to the 0.2 level. So I do think it would remain prudent for us as long-term investors where we want to try to find good value to still remain cautious. I'm not saying don't have a Bitcoin position. I'm just not really having much of an altcoin position, and I'm still sitting on about 63, 64, something like that percent cash, right? Because I just think that these market conditions call for us to be cautious. And one of the most common forms of criticism is that, why do you have such a large cash stack at the bottom? And my retort to that, and this was what I heard throughout the summer, is why do you have such a large cash stack throughout the bottom? Right? It's presumptuous to assume that the bottom is in every time we go lower. And I mean, again, all we had to do was wait a little bit longer, and eventually Bitcoin went lower. Right? I mean, it just took patience. So remember, the accumulation phase tends to last a long time. If Bitcoin were to pump to 17K tomorrow, it doesn't necessarily mean that the bear market's over. There are still plenty of macro headwinds that face us, in the coming months and even over the next year. So I think that I really do think that we're going to see more apathy hit the market. And once you see this social risk metric really start to come back down, that is where I think altcoin accumulation should really be more highly considered. And if you look at some of the other bottoming indicators, it's always a good idea, I think, to check in on some of these things. Like if you look at the 30-day SMA of supply and profit and loss, they are starting to converge back to one another. Again, historic bottoms occurred after they crossed, not before. So they occurred after they crossed. If you look at the balance price, again, we still have not had any daily closes below it. It now sits at 14.92K. And another piece of common criticism that I got throughout the summer is, why do you only show the more bearish indicators for the bottoming indicators? Like, why don't you go and remind people of things like for instance, the Pi cycle bottom, right? Where it said this was the bottom back in June. And the reason is because they're not showing anything new, right? Like they showed what they thought was the bottom back then, but because I'm a more risk averse investor, I want to see all of the indicators show a bottom, not just the more aggressive ones, not the more optimistic ones. I want to see all of them. And once you get that confluence, then I think you can start, really begin the discussion as to whether the bottom is in or not. Okay, that is simply my point. And so far, I think this has served us well. I'm not trying to, mislead you into thinking that nothing is bullish. There are certainly some indicators that lean that way. But again, the indicators that don't lean that way have kept me bearish throughout this year. And so far, it has actually worked out quite well. If you look at the Peel multiple, it tends to bottom at around 0.3. Currently, it's at 0.389. So again, this is one of those indicators that is coming down. And once you see all of these really hit these macro bottoms, I think we can start to really have a more serious discussion as to whether the bottom is in or not. And if you look at the indicator dashboard and account for everything, of course, the price risk and the on-chain risk remains low, right? Like if you look at the on-chain risk, it looks relatively low, right? It still is above historic bottoms, right? It still remains above historic bottoms, but it is relatively low. Over the macro scale, is 16K a good price? It probably is, right? If you're talking, 2 years down the road, is it a good price in the next 3 months? There's a good chance we could go lower, right? There are a few indicators that still would suggest that we could go lower, and it's because of that I just simply choose to ignore the altcoin market until I feel a bit more confident on the direction of this asset class. And if you go look at the summary risk, which includes all three of these things, you get 0.16. Still well off historic lows. So one of the ways you could interpret this is that, and again, I'm not saying this is necessarily the correct interpretation, but one way you could interpret this is that the price doesn't actually have to go that much lower. It's just that we need more time for people to become apathetic, right? You could think of it like that. There's still too many people watching, and markets do not tend to bottom when everyone's watching and constantly wondering if the bottom is in. Doesn't mean you can't have bounces. Bitcoin has had plenty of relief rallies this year, but none of them so far have been the bottom. Now, of course, we could still argue, people are already starting to wonder if this is the bottom, but so far, none of these places that a lot of people argued were the bottom, none of them have been the bottom. Still too many people tuning in, I think. There's still too much anxiety and fear in the space. And so, I think it's these sort of indicators that remind you as to why you should be cautious. And you might say, well, you should ignore the social risk, like only look at the on-chain risk or something, or only look at the price risk. But I'll remind you too that these indicators taken by themselves did not really call the November top, right? So even though it went higher than it did over here, it was still lower, right? I mean, you could see something like that play out at the bottom as well. If you look at the social risk, it does capture the November top a lot better. And it still went, to the 0.9 to 1 risk band, even though most things didn't. So I think by combining all three of them together, you actually get a pretty good handle on the asset class. And what it tells and what it tells me is simply we need more time, is what it tells me. It just says, you know what? We're pretty low, right? It's pretty low. And are you going to regret buying at 16K macro scale? Probably not. Doesn't mean it can't go lower, right? And it's meant that all year long. It's meant that all year long. And so far, all year long, it's gone lower. I mean, it hasn't really been that complicated. It's just, people aren't tuning in. As, people are slowly tuning out. People are losing interest. The price is generally going down. And eventually, we bottom on apathy. Okay, so that's what we're looking for. And it's a slow and grueling process. I'm not trying to make light of the situation, but you got to stay resolute through this time period. I mean, you have to stay disciplined because, in a few years, when people tell you were lucky, they're not going to know the anxiety you felt during these phases. It's easy to look at the chart and say these guys were lucky. It's easy to look at the chart and say these guys were lucky and these guys were lucky and these guys were lucky. It sure is a hell of a lot harder to sit here and live through it and exercise that discipline, right? It's very, very difficult. So just remember that when someone, when someone in the future says that you were lucky, okay? Because I said there, I have plenty. If you go back and look at my channel in 2019, I said the same thing. I was like, look, guys, eventually people are going to call you lucky. They're going to say you were lucky for buying ADA at 2 cents. and for buying Ethereum at $200 and for buying Bitcoin at $4,000, right? They're going to say you were lucky. There's no such luck, right? There's no such thing as luck in this. I mean, it's you take a calculated risk and it pays off or it doesn't, right? And right now, I am not taking that risk on the altcoin market. I'm just simply not. And I understand that every time we have a rally in the altcoin market, people start to get a little anxious and wonder what's really going on. But I don't regret my decision for 1 minute. I mean, you look at Total 3, and it's just been one bear market, for the entire year. I mean, since January, the we were at about around $1 trillion for Total 3, which is the entire altcoin market. Now we're sitting at 321 billion. You know, this is not something that I feel bad about sitting out on, right? I feel quite happy that I reduced my altcoin exposure in the first quarter. I also reduced my altcoin exposure a lot back in early 2021 during this first mania phase, right? Never let a good bubble go to waste. I said that back over here. Even though I thought the cycle would last longer than May of 2021, I was like, look, you never let a good bubble go to waste. I didn't know that it was going to pop back up and form some secondary distribution phase. Doesn't matter, right? You get a bubble, you don't let it go to waste. Never let a good bubble go to waste. I look at this chart, Total 3, which is the altcoin market, everything but Bitcoin and Ethereum. How can we yet say that it's in an accumulation phase when we're still putting in new lows? I mean, the altcoin market as a whole literally just put in a new low 6 days ago. It's really difficult as a long-term investor to constantly want to try to catch this falling knife. I don't know if this is the macro bottom or not. I would lean towards it not being the macro bottom, and I would lean towards thinking that it needs to still drop a considerable amount. I wouldn't be surprised at all if the altcoin market dropped another 50%. Would seem quite normal to me, in fact. Right? I mean, honestly, it would seem quite normal to me. And if you go look at some of these altcoins we've followed, right, like ADA Bitcoin, I do think it will break down. Solana Bitcoin, I spent a long time, talking about how I think it was going to break down from this level, and it finally did. AVAX Bitcoin, we've talked about this one, that it's likely to be breaking down, and it is slowly breaking down. Sometimes you just have to wait, right? Like sometimes you just have to be patient. And I can't, I mean, I can kind of try to come up with creative ways to say the same thing, right? But there's only one way to say it, right? There's only one way to say, like, we're just in a bear market, and they can last a long time, and they take everything from you if you're not positioned correctly or in a way that manages your risk. They can take everything from you, so that by the time the accumulation phase is here, you have no interest in the altcoin market. Why? Because if you YOLO'd every bear market rally along the way, you don't have any money left. So who creates the bottom, right? Who creates the bottom on the altcoin market? It's not the people that buy every bear market rally, right? It's not these people. Because, I mean, they simply run out of money by the time it's over. It's not these people. They don't create the bottom, right? It's the people that just sat around and stacked cash throughout the bear market once they realized the bear market was here. They're not chasing sorry. They're not chasing these pumps because they're irrelevant to them. Now, some of you are probably swing trading these pumps much better than I ever could. So, if you're buying the local June bottom and then selling it in mid-August, then congratulations, right? Congratulations. I mean, that would have been a great move to take. But for me, I don't really care about that, right? Like, I just care about trying to identify long-term accumulation phases, right? That's what I care about. Identifying this phase is what I care about. I don't care about buying these bear market rallies, right? Because you can lose all your money trying to trade them. By the time you get down here, you have no money left. So then by the time it goes back up, you're one of the first sellers creating resistance levels because you want to just get your money back from buying it back over here. And you sell and we go down and then we go back up and then you get left behind and then you buy back in later on, right? I mean, this is what happens. So again, The people who create the bottom are the people that just sat out. They sat out of the bear market. They saved money. They waited. And when the time was right, they came in and scooped up all the cheap altcoins. I said back in, I said back like a year ago, right? Like if you if you join crypto in 2021, you simply do not know what a cheap altcoin is. Like it's just a fact, right? If you joined it in 2021, you don't know what a cheap altcoin is. I mean, imagine in 2021 you joined and ADA was at $1 and then it went to $3 and now it's sitting at 30 cents, right? Like DOT is at $5, AVAX is at $12. Not that long ago, it was at $152, right? Solana is less than $13, and I still have no intention of buying it at these prices, and it's still down 95%. Why? Because fundamentally, I don't really think it makes sense, but furthermore, it can still go down a lot further. I mean, like a 98% drop, or even like a 98.5% drop, it can happen, right? I mean, like that would get it down to $3 to $4. I'm not saying it has to go that low, but I can tell you that it can. ADA did, right? I mean, ADA went that low back in 2018, and it wasn't a part of all these like shady exchanges and people pumping and et cetera, right? I mean, look, ADA dropped 98%. Didn't have nearly the same amount of FUD that Solana has right now. Not even close. Not even close. And I still bought down here, right? Like I still bought down there. You have to be patient, right? Like you just have to be patient, and I mean I think the time will come, um, and when it comes, I will pivot, and I will say, all right, I think it's time. But I mean I still stand by my conviction right now in the altcoin market. I just don't think it yet makes sense. I'd like to see it. I mean I'd like to see at least a little bit of um, um, relative strength by Bitcoin first. I would like to, to get a little bit more clarity on some of the macro headwinds that face us. But look, I mean, as long as as long as the Fed isn't playing ball and they're draining liquidity from the system, I mean, you can throw your cup of water in the swimming pool all you want to, and the water might temporarily go back up, but the drain's still unplugged, my friends, right? Like it eventually the liquidity gets drained. So again, I think patience is required, right? I think we're going to see some bear market rallies. They're going to happen. They always do. And I think 2023 is likely going to be the time to start to really get into the altcoin market. Look, guys. I mean, it's already November of 2022. I mean, this has been already a year-long bear market, and I know some people are starting to lose hope. Um, but I'm telling you, you have to, you really, I think it'd be a good idea to stick this through and to be patient and to wait and use 2023 as a year to position yourself accordingly for for the years after. Thank you guys for tuning in. Leave a comment down below if you have any questions. I'll see you guys next time. Bye.